So I'm Kain. I lead the market development efforts at AWS, and my team is one of the investments AWS made into the financial services industry almost 9 years ago. Originally, Amazon Web Services supported our customers as sort of enterprise customers based on a geographic basis, and we realized at the time to be successful in financial services, we need to actually build out a dedicated organization to sort of help our customers adopt specific to financial services. And a good part of that was helping them meet regulatory and compliance needs, but also part of that was making sure that we understood the environment they operated in, not just from a regulatory and security perspective, but also from an industry perspective. Very much financial services is a community of companies that interact with each other. So everybody's a counterparty of everybody else. And having an appreciation of what those companies did from a business perspective and how they use those kind of infrastructures across the industry that interact with each other was something we thought we had to be expert and versed in to help our customers. And so my team, which is organized into teams that kind of help that effort in capital markets, payments, insurance, and banking, helps our customers sort of focus on what they're trying to do from a business outcomes perspective, and then maps back to how AWS and our partners can help. As part of that, I help set our direction from a kind of partner strategy perspective to make sure we're bringing the right financial services software providers to run on top of AWS. And then secondly, I work with our services teams to make sure that we help them prioritize those features and functions that are kind of critical for the financial services industry. I've been here with AWS for 8 years, but I'm out of industry like most of my team. So I'm formerly out of like JP Morgan Chase and NASDAQ and Citibank, and have kind of worked in all aspects of the financial services industry.
So today we're gathered to talk about the practical applications of AI. And one of the key cornerstones of using AI in a meaningful way, obviously, is having good data in. So what have you seen from your clients and from your experiences working the best when it comes to what data is readily available for financial service institutions that they can get hold of consistently and use in a meaningful way? Like, are there any particular standout use cases where this just makes sense?
Yeah. I mean, one of the things to remember about financial services, it is a highly complex and regulated entity. And so key to actually being successful from an AI perspective, as you mentioned, Chris, was having data and that data available broadly across the organization. So the real key for our large financial services customers is to break down the silo between data in the organization, making it available to teams across the organization. Increasingly, what financial services firms are trying to do is create as personalized and complete experience for its customers as possible. And in order to do that, they need to see the full relationship that a firm has with the customer, very much through every product that they offer the customer and every customer interaction they have across omni-channel. A good example of a firm that's actually kind of done that in a really thoughtful manner on top of AWS is BBVA. They've actually built their ADA platform, which is their sort of enterprise data architecture on top of us. And what that really allowed them to do is kind of create this publish to subscriber model that allowed lines of business to share with the rest of the organization in a secure, compliant way their data, so that their data science teams could actually build applications on top of it that took advantage of the full breadth of information they had within the organization. Outside of just sort of the enterprise need, we're also seeing many of our customers that have expertise at aggregating data, particularly from like a public perspective, really look to commercialize that capability and make it easier for their customers to work with. Both Goldman Sachs and JP Morgan have looked at sort of taking their expertise from a data collection and curation perspective, making that available to their financial services customers as a service. So JP Morgan's Fusion platform built on top of AWS, Goldman Sachs' data cloud. And what that allows is other firms to take advantage of the expertise and insights they have for managing data specific to financial services and making it available. And that combination of being able to source external data that is critical to understand your customers, but probably more importantly, being able to actually take the data that you have internally and make that available to your own systems allows you to differentiate from other firms in the financial services community.
You mentioned you've been doing this for 8 years, the business over 9 years. What fundamental shifts have you seen over that time when it comes to how financial services companies think about AI or approach machine learning? And I assume it might have accelerated a bit in
Yeah.
the recent year or so. But what are the major themes and shifts that you've seen?
Yeah. I don't think we appreciate how fully machine learning and artificial intelligence is already part of sort of the financial services kind of infrastructure. Even today, before generative AI, for a customer that like wants to onboard, if you look at Mox, which is a digital bank that was done in partnership with Standard Chartered, the ability to actually onboard a customer on a mobile device, right? Take a picture of yourself, take another picture of your life, um, compare that to a government database, then get sort of standard credit scores plus social history and maybe other information like your telco data, and then do a personalized credit score for you and actually give you a virtual credit card. All of that happens now in under 2 minutes, right? And all of that's actually driven by machine learning in the background, whether that was kind of image matching, kind of text extraction, or using analytics to kind of derive a credit score. It's the same thing that you see with a Klarna or a firm with buy now, pay later, like when you're checking out. They're actually doing personalized loans within a few hundred milliseconds at point of sale. And that's all driven by kind of machine learning, artificial intelligence. And you can probably go through the industry as a whole and you'd find almost every aspect of it has some of that artificial intelligence kind of built into it. What's happened more recently is with the advent of generative AI, the pace of change and the ability for customers to take full advantage of that technology has just sort of dropped that barrier. And if you think about sort of in the past, you used to have to train a machine learning algorithm on every particular problem that you wanted to solve, right? So if you wanted to extract data from a mortgage document, that was training and it took time to build the model. If you wanted to do transcription, it took time and you had to build the model. Now with generative AI, the very large capable models that are good at a variety of tasks. And what that's allowed our customers to do is basically accelerate their use of machine learning, sometimes very much in the same cases, but adding kind of greater capabilities, which has helped them both sort of automate their processes internally, but also expand the breadth of services and scale of services they can offer to their customers.
So that's interesting. There's obviously a lot of different use cases, and how would a bank typically straddle the gap between wanting to innovate and doing what their competitors are doing to catch up, with regards to local rules and regulations and experimenting with these tools in general? How have you seen they straddle these two sides, risk versus reward?
Yeah, it's financial services by and large is actually probably in a better position than most industries when looking at the risk and reward of machine learning, and then I think more importantly, kind of generative AI moving forward. Most of our customers are kind of highly regulated, and part of that regulation that's been out in the industry is actually how to use algorithmic models as part of decision making within your own business. So a lot of what we wouldn't see commonly in other industries is actually kind of built into the financial services sort of approach to machine learning. It's appreciating what the risks of the technology are. Is the model appropriate? Having sort of that lineage of data that's being used to develop those models, and then actually seeing how they perform in production. And you'll actually see within SageMaker, which is our machine learning platform, or our own models from a generative AI perspective, they follow that very much same capabilities. So in SageMaker, it allows you to sort of trace the lineage of model, understand the data you're using, understand how it's performing in production in a way that's easily reportable and scalable to customers. And from a machine learning capability, we have things called model cards. And model cards basically go through that sort of assessment of what's the model actually do, what use cases is it appropriate for, what are the risks of the model, how do we actually develop and test it. And so we're trying to give our customers the transparency to kind of make intelligent decisions when it comes to risk. Now, there are certain use cases that customers are kind of comfortable with. And if you look at a customer like Remitly or Rocket Mortgage, they have applications from a generative AI perspective that will interact with customers, giving them sort of statuses of their mortgage or their remittance, and doing that like on a 24/7 basis across multiple languages. especially you think about countries that have to deal with that in the global context. There are other use cases from a risk perspective when you're making a credit decision or a loan decision where you still want to keep a human in the loop. And in those cases, what we're seeing is financial institutions very much using the technology to make the employee experience or the agent experience more superior, bringing the right information and context about the customer interaction to the actual point of customer interaction. And I think one of the areas we've seen generative AI be used very successfully is on that customer interaction kind of call center context. The ability twofold. One, from just like a transcription and call summary perspective, and you can look at customers like Principal Financial, which have been very public about how they've done this. That ability to actually allow an agent just to interact with the customer and not having to worry about taking notes or kind of transcribing the call allows for a higher customer service. From a after the call summary, there's a time savings in not having to do that, but more importantly, it allows you to use human queries to say, why are my customers calling me? How long are they being put on hold? What is the best customer satisfaction? And that actually allows them to improve the process, driving customers to more digital channels where they can get answers faster and at lower prices. But then for the customers that still need the human interaction, it's providing that agent with suggestions about why the customer is calling, what the likely best way to support them is, both making that customer experience better, but also driving the amount of time that customers are on the phone together. And we've seen that type of time savings across many of our financial services customers.
So when you're trying to advocate for AI use in business, what do you think are what are the most common misconceptions that you come across when it comes to businesses wanting to build safe and reliable AI system? Any theme, reoccurring feedback that you keep getting?
Oh, I think let me step back there for a second. I don't think there are misconceptions. I think firms understand that they need to put the appropriate guardrails in place to make sure they're giving the best and most accurate advice to both customers and their internal employees. And when generative AI first came out, I think there was a high degree of concern about the level of hallucinations or incorrect answers that would come out of generative AI models. What we've seen, though, there are a number of patterns that actually can dramatically reduce the amount of hallucinations and make those models more accurate and actually kind of anchor them back to kind of source information. So one of the key areas we've seen many of our customers build is around knowledge bases. And so essentially, instead of allowing a generative AI model to just respond, you anchor it on a set of information, right? That could be market rules in the case of the New York Stock Exchange. It could be insurance policies in the case of an insurer. And you use the generative AI models basically off that core information, which is called like a RAG, a retrieval augmented generation pattern, which helps keep the conversation focused on the topic there and drives down the number of hallucinations by that nature. On top of that, we've developed what we call Bedrock guardrails, and Bedrock is our generative AI platform. And what guardrails does is allows us to kind of sit above multiple models and actually use generative AI to check sort of the inputs and the outputs to generative AI models. So if you have something that's a lending or sort of investment advice large language model, you want to make sure that the questions that going in are about that topic. And so we give the ability for our customers to kind of filter out topics that aren't appropriate for that particular model. And on the outbound side, we do the same thing with the output of those models to make sure they're sort of accurate, responding to the question with sort of detailed information. And in those cases, we can reduce the amount of hallucinations, which are already reduced by using a knowledge base, by another 70%. And we've seen customers intelligently use that approach to get more tailored advice that's more accurate. A great example of that is NatWest. NatWest was doing personalized offers to their customers for banking services like a high yield savings account. And they took an interesting approach. The first step they would do is they ask a large language model to create the most compelling kind of marketing message for their customers for, let's say, a high yield savings account. The second thing they would do after large language model generated that is they'd actually send it through another large language model that would say, hey, look at that first email and then tell us, what are all the corporate messaging policies that it violated, and how does it not really sound like us? And then it would take that output and say, okay, given that feedback, draft me sort of an appropriate email for our customers. And then that would be reviewed by a human. And they found actually those emails had a 4 times higher click-through rate and much better sign up for customers, right? So the ability to use generative AI to help make generative AI more accurate is actually something we're seeing in the industry. And that kind of ability to provide timely, accurate information is getting better kind of every year.
Well, on that note then, so what large language model would they have used? Is this like a publicly available chatbot where they just put their question, or is this their own data somehow, or
Yeah.
how does that work?
So I'll have to go into a little product here, Chris, but it'll help you understand sort of like our approach here. Very much when we built out our generative AI platform, very much thought about this as an enterprise type platform. So first and foremost was security and privacy were paramount. So whatever large language model you use from our platform, it's within your own account, and all the prompts that you kind of put in or come out stay within your account. There's no potential for you to kind of leak between models or kind of have that information frame back to other models. Then Bedrock gives you the choice of using multiple different models, right? So essentially, it's one API that will serve models from ourselves, from Amazon, Nova, our first party models, Anthropic's Claude, Llama from Meta, as well as others. So you can actually choose which model you want to try, both from a size perspective, right, with capability of each vendor's models, and between vendors. And we help you automate that process of evaluating which model is actually appropriate for your use case. So it's very much giving firms like NatWest the choice of which model they want and easing their ability to evaluate which ones work the best from both a price, performance, and latency perspective. So it's very much a platform of choice where customers can experiment with the latest models. You know, when DeepSeek sort of hit the news, I guess a couple of months ago, it was only a matter of sort of days before it was available in Bedrock, and then within like a month, actually kind of on par from an access perspective with the other models that we added on the platform. The other thing we're seeing from an approach perspective is agentic and more tailored models that are domain specific are becoming a more important part of both making model output accurate, but also making the model smaller and more cost efficient. And so we have something called the Bedrock Marketplace, which allows customers to access another 100 domain specific generative AI models as part of that kind of choice. And so we believe that there's no one model to rule them all, and give our customers choice so they can pick the right model for the right use case.
How does it work in practice if you kind of sit between like a middle layer kind of to protect the client from leaking data? But if I'm writing a query like, here's a marketing pitch, tell me what you think, wouldn't that eventually end up within Llama or ChatGPT?
No,
and therefore they see that?
You actually have your own instance of that model within your account, and it's just for you, right? And so there's no feedback that ever goes back to like the original model provider.
Well, it can query the universe, but the query itself doesn't live in the universe.
Correct.
I'm with you. So thinking about wrapping up a little bit here, what do you think will surprise us the most when it comes to the future of applications of AI? And then let's say the next three to 5 years, what are you keeping your eyes out for?
The evolution of agentic generative AI is rapidly transforming the way we think about developing applications. I think there's a twofold thing to keep an eye on. First and foremost is how rapidly the capabilities from a personalization perspective are occurring. That NatWest example I gave you was from about 18 months ago at reInvent, which is our big industry conference. MUFG did something similar on the personalization side using agents, except it did it for corporate products that were quite complex, like derivative swaps, right? Where it could look at its customers' internal positions, public filings, as well as public news to help their customers anticipate needs for very complex financial products like FX swaps. And that ability for them to like break that complex problem into smaller problems and then actually go create new ideas, they're able to create new ideas 100 times faster. And the ones they position in front of customers converted at a 30% higher rate. So that ability to do more complex things with agents is definitely changing. And then when we think about sort of what agents will do in the future, they'll replace a little bit what we consider API calls, right? So a lot of what we see in the industry are systems that are able to call APIs and interfaces for certain services, like a KYC service or an onboarding service, things like that. Well, those APIs, I think, are very much going to become agent-driven in the future, and you're going to see the ability to build applications that are really orchestrating agents that are fine-tuned for very specific tasks in the financial services industry to allow customers to innovate more quickly on top of those agents to bring more value to customers and really have very fine-tuned generative AI capabilities in very specific domains. And I think that's going to transform how quickly financial services firms can innovate in the future.
Fascinating stuff, John. Thank you very much for your time. Really appreciate that and look forward to following what else comes from your team and from your clients' work within AI.